one another hoping to have a smart kid because AOL doesn't know what they're doing. Yahoo's completely lost. What would come out of a deal?
The only
like
thing
that?
I would say is they've got like 3 adopted children who are really smart.
Yeah.
That's Alibaba Group, and Yahoo Japan. Shed that, and it is a really good business. I think it's a perfect trade where you're getting a discount as people don't believe Carol Bartz. And let's face it, these guys, their stock's trading at $16 now. It wasn't that long ago, we all remember, when they could have gotten $35, $36
$40
a share.
billion from Microsoft.
Right.
And Congress passed a bill saying it's illegal to call someone retarded. You must say intellectually challenged.
Yeah, I got it. Or retard. You can't use that either.
Google, by the way, I love that stock. You know, not that long ago, it was trading at $282 a share.
Yeah.
You know, 18 months ago, it's now at 600. It's still trading, by the way, relatively cheaply. 13 times cash flow. That's actually really good for a company that will be dominant as far as we, as far as we are going to be around.
What do you call Google? Meaning, what kind of? They still call it a search engine company. It seems like it's not. It's more of an advertising company. It places ads. That's where it makes its money, right? It's all around placement of ads.
Right. Well,
right?
the big news this week was, hey, our revenue is up quarter-over-quarter 26%, which is pretty damn impressive. But the other impressive thing was, hey, now only 92% of our revenue comes from AdSense, right? It is a one-trick pony, as people call it. They don't like to think of it that way. But what's fascinating to me is you got, what, 20,000 employees at Yahoo? And might be more. But probably around 3,000 or 4,000 people can run, I should say Google. 3,000 or 4,000 people could run Google. And the rest of the business is around all these other damn initiatives. So at some point, maybe you just shut those down and you just milk it for what it is. They also claim that they're now monetizing 2 billion impressions per week on YouTube. Although it's still less than collectively mobile search and YouTube is collectively still under $1 billion a quarter in revenue.
It is interesting, especially with Google TV rolling out now. They have to make nice with all the content companies because they want those deals on Google TV. So the Viacom, which used to be a nemesis, I'm not sure who was with us in Korea, Sumner Redstone gets up on stage and he says, I'm going to get those fuckers, being YouTube. I mean, he just openly says, I'm going to get them. They have to be friends now because Google wants that content.
Yeah.
So everything that's on YouTube is extremely monitored and removed as quickly as possible now because they don't want to piss off the content providers and studios.
Yeah.
Different approach.
Yeah, I agree. But it looks like they're going to make money on it.
What happened with the VC market this week? Some new numbers came out.
So, right. Quarter by quarter numbers for venture capital are always kind of suspect, of course, but it was down. But part of the reason is you have these giant deals, $100 million, $200 million for a specific company. The next quarter, those aren't in there and the numbers drop, or they go up because of that.
But is 7% down? Is that a big number for a quarter?
I would say it's not a big number, but it's in the noise. But the more interesting number to me, frankly, is how much capital has been raised by venture capitalists this year. So keep in mind that in 2000, of course, it was crazy. Over 100 billion was raised by VCs. Now, in the mid-decade, it was around 35 billion a year was raised, and about 2 billion this past quarter was raised. We're on like a 12, maybe 14 billion dollar raise for all VCs this year, which is about half of what it's been mid-decade. That to me is concerning.
Bill, is it decentralizing? I mean, I would say yes, there's overall growth, but are we seeing it decentralized from the focus areas that it was Silicon Valley, Boston?
The question about is the money? Yeah, and it's not really. The money is still 50% is one state, that's California. 20% is one other state, Massachusetts. All the other states, pick up little drips and drabs. The vast majority of venture capital is still coming out of Silicon Valley.
It's Palo Alto, yeah.
It really is that.
And then how does it compare with the growth internationally, whether it's Israel or England or what
Yeah, it's still worldwide. The vast majority of venture capital is in the U.S.
But the
right?
growth is about the same percentage?
Growth is higher, and growth is fine. You're seeing a lot of interest in India, and interest back again in China. Those are the two countries where most of the venture capital is flowing into. Europe, it's just never been a place that's been very attractive for venture capital.
Because of capital gains issues.
I think it's I really think it's cultural.
It's history, not innovation. What's the story with private equity and public equity with funding in that in those regions this year?
Well, if you include in private equity, if you include hedge funds, I think hedge funds are going to come roaring back, right? Mainly because you've got all of these institutions that need to place their money somewhere. Hedge funds remain the best vehicle to do it. And it's interesting, with all this financial reform, the Frank Dodd bill, hedge funds that were captive within banks, they call them prop trading desks, proprietary trading desks. Those, as the bill didn't say that is now no longer allowed, but the bill did say we'd like you to discourage it. So what's happened is a lot of those hedge fund guys are leaving the banks and starting up their own hedge funds outside. But here's something I do find interesting about it. They're not required to. Goldman Sachs and all these other big banks are not required to get rid of their proprietary trading desks, but they are. And I think the reason they are has very little to do with the law and more to do with economics. And it's my belief that they have found that is just not as profitable a business as it used to be. And the reason was they used to take deposits that were guaranteed by us, and they put those and levered them 40 to 1, and they gave them to proprietary traders and said, you know, put in a couple of % of equity, the rest is deposits from us, and bet on the market. Now they're being limited 10 to 1, which is still a ton. And at 10 to 1, these guys can't make money. And the reason they can't make money is because they're not doing anything that special. They were catching very little deltas in spreads and stock prices.
Adam?
What do you think about that deal that Facebook basically let them in their walled garden?
Being Facebook.
Yeah, I didn't look at it, so I don't know.
Understand, by the way, Microsoft does own, what, 2.2% of Facebook? So, I mean, it wasn't they let them in, there was a door already open.
But it actually seems like that might be a good competitive advantage.
Internalize the, yeah, because I do so many searches inside Facebook. I mean, seriously, I never understood that when MySpace and Google did that deal. Remember that? That was an $800 million deal MySpace did with Google. Because I was searching like crazy. But it's for ad placement, obviously. It's on the side ads and all that. But,
Yeah, just that I think on the IPO market, you know, it began really great at the beginning of the year. Got cold. Got cold because during the Greek crisis, everyone went to more secure assets. Even today, if you're a sub 500 million, even $1 billion market cap company, there's very little interest in you from the public markets because there's a flight to quality and security. But the big names can still go out. And so Green Dot, of course, went out this year, 2 billion market cap, and it's still up by
You like Green Dot?
40%. I do. I mean, it's heavily weighted to one company, which is Yahoo. I'm sorry, which is Walmart. And every time somebody tells me as a venture capitalist what I can do with the company, oh, you can't take a company public unless it has 100 million in revenues. That turns out to be bullshit. Can't take a company public unless it's profitable. That's not true. There's always exceptions. But one I was pretty sure about was if you had more than half your revenue with one customer, that kind of revenue concentration would prevent you from taking your company public. Green Dot, it's got to be over 60%. It's one customer, and that's Yahoo. And they're still trading really, really high. So Walmart. Which just goes to show you, you know, there are no hard and fast rules. But the companies that I think will be filing pretty soon, who knows about Facebook, but...
yeah, but Facebook, there's some interesting situations there because they're heavily leveraged inside the company now, right? Where a lot of this institutional stock, and the SEC is actually starting to come down on that.
Yeah, they're going to have to start reporting, right? Because they have so many shareholders. But Zynga, I think, will file in the next 2 or 3 months, is my guess, maybe 4 months.
Is that going to be a hard story to tell the investment community what Zynga is? is that an easy buy where people go, oh, I get it, I'm going to do it? Because aren't they, in theory, heavily leveraged on the worlds of Facebook? Aren't they?
Yeah, so Zynga, let's face it, any company that goes from 3 years ago, Zynga didn't exist, just about. Now it's worth 5 or 6 billion according to the last amount that was invested in it. That's super impressive. I've heard, no one really knows, but 700, 800 million of revenues from nothing. You know, that's a super impressive story. I actually think one of our metal members' company, when it goes public, is gonna be very interesting for Zynga, and that's Brock Pierce's company. He has a business which is the world's largest exchange for the trading of virtual goods in the secondary market. So if you buy a good from Farmville or whatever, and you want to trade that to someone else,
because it's old. Yeah, your battle axe, your virtual battle axe is old now.
You're done with it. So he's got a company that he'll be taking public at some point in Hong Kong.
It's not gold, it's gold, it's Chinese gold farmer gold.
Yeah.
Source.
It's
not
right.
really used.
I'm kidding, I know. It's virtual.
But the point is, I think when they see that, the kind of trading that takes place, and exchanges can be very profitable in his company, I think they'll understand better what Zynga could ultimately be. And the IPO window for now is probably pretty shaky for anything but the LinkedIn's, maybe Twitter's, Zynga,
LinkedIn's
Facebook.
pretty impressive. Demand Media? Oh, we love Demand Media.
They're doing a roadshow.
Yeah, Demand Media, I mean, they've got certainly a lot of revenue. How well they do, I don't know. I mean, I
But
hope
there's a
they
lot
do
of
well.
speculatism regarding, once you get in their books, regarding the actual traffic numbers are a bit skeptical, some would say.
Yeah, I don't know.
You're
I
not going to.
assume-
You're on camera, I'm not.
Right. I think look, Demand Media has figured out a way to monetize traffic that otherwise would probably get very, very low rates. And so that's a good model. And what I read in the S1, they control, I think it's 20% of all of the .coms. I mean, that's, you know, you get that kind of scale, you can make money.
Well,
So thanks, guys.
Quickly, all right.